Good morning, traders. Tony D here from the Easymarkets Dealing Room. TraderTalk here on Friday, the 14th of July 2017. Big day ahead of us. We've got the US CPI numbers. These have grown in importance in the last couple of days as Yellen has been talking about CPI on Wednesday being lower than the Fed is actually expected, and also, the transitory nature of it, she's not so sure about. She changed the tune a little bit last night, saying that she still expects it to be transitory, but the damage has been done and the market focus has already turned to this key piece of inflation data that's coming out tonight. If it's a little softer, which is definitely on the cards given the fall in oil prices during June, then you will see potentially the US dollar come under more sustained selling pressure. At the moment, we did have a recovery overnight. If you're looking at the dollar yen, it bounced in line with US 10-year yields. US 10-year yields, remember, are very important for setting the direction of the dollar yen. Correlation there, 0.7, 0.8%. So if you see US yields go up, most of the time you're definitely going to see dollar yen go up. Looking at the chart last night, you can see here the 2.3 level on the US 10 years held. That's a key level. Markets were looking to that for guidance. Bounced off that in line with the dollar yen move higher. In terms of the other data that's coming out tonight, we've got US retail sales, always important, okay, but also a very volatile number, so not usually picked upon by traders to set the tone of the market. Definitely inflation does have that ability. The euro holding back at 114, not really kicking lower, but the buyers are still a little bit cautious here and probably looking towards that US CPI number as the key, whether we have a retest of that 115 next week or we settle into a bit more of a careful range here at the higher end of the recent trading zone. So 113 on a pullback would be potentially where the market may etch out a support if we do not have a move higher soon. In terms of the Australian dollar, a lot of traders asking, is it going to hold this time or is it different? 77.50 has held for 2 years now. 78.50 was a brief high back in 2015, 2016, but generally 77.50 has been a selling level. The last 11 times the Aussie's gone above 77, we've come back down. So in terms of why we could come back down, the market has put the Australian economy into a similar basket as the Canadian economy. While that's the case, you are going to see the market look forward to potentially the RBA raising rates quicker than is currently priced in. Until we get some clarification from the RBA saying that Australia is a little different to other developed economies, then the Australian dollar will rise or fall with the general US dollar reactions. So tonight, another key piece of data with that US CPI. If it comes in weak, then a break above 77.50. Next week, we're going to be talking about 80 cents potentially here on the Aussie dollar. In regards to the trade that we're in from earlier this week, Aussie Kiwi. Aussie Kiwi did pull back to the 105.50, held that test, so we are well positioned here technically for a push higher. Keep an eye on the top side. 106.30 is the first initial resistance. Alright guys, hope you all trade safely. We have the data coming out in terms of 10:30 Sydney time PM, the US CPI, 8:30 Singapore's 8:30 PM Singapore time. If you want more information, please contact us here on the desk. If you're not a dealing with client, look at below in the below the YouTube there. You'll see the access to look for information about this broker.